Welcome, everybody, to the Investing in Real Estate show. Clayton Morris here. So glad to have you here. I'm a longtime real estate investor, and on this channel, we aim to make you a more financially intelligent investor. These things, of course, we were not taught in schools when we were growing up, so we have to be self-educated. This is the most important thing, is to be self-educated. And thank you guys for taking some time out here to do just that. We're going to get into your Q&A episode portion of the show in just a moment, where you can leave us a voicemail question. You can do that by going to our website. Just go to morrisinvest.com, and there's a microphone icon on the right side of your screen. Click that and leave us like a 30-second voicemail question, and we will attempt to answer it here on the show. So we got some really good economic news over the past few days. This is exciting from an inflationary perspective and from an interest rate perspective. So we saw, based on what the Fed did last week on these consumer price index numbers, so the CPI number came in lower than expected. So the cost of things came in lower, and that's great. And that has been consistently going down now. There are a number of analysts, it's really interesting to look at, where they believe this is one of the strongest economies that we've had in decades, and yet people just don't feel it because the cost of, gasoline, the cost of groceries has gone up. But we have a really strong labor market, according to the data, and we have the cost of goods and services, of course, are going down. Therefore, interest rates in the mortgage space has also plummeted significantly. And speaking to builders last week who said, and realtors who said, the number one thing, of course, that's been slowing up the market has been interest rates. Nothing else. It's been interest rates has drawn people to a halt. Well, good news. So now we have the biggest drop in mortgage rates in months. And of course, there's pent-up demand. So many people want to buy a home, and so many people have been waiting to sell their homes, but they've had really low interest rates. So they're like, wow, do we really want to sell our 3.5% interest rate home for a 7% interest rate home? No, I guess we'll just wait. So there's been all of this supply and demand issues right now. There is pent-up demand like you wouldn't believe. It's like the pressure of a soda bottle being shaken up. That's why I'm predicting, and we'll see if I'm right, but I am predicting that once we get through the holiday period, no one wants to move during the holidays. But once we get out of that and we get into the spring, and if interest rates continue their downward climb, we are going to see an explosion in April and May. So we could see one of the hottest real estate markets in years. We could see bidding wars. We're going to see a lot of craziness in the spring. That's my prediction. If interest rates continue their downward climb, that's what we will see. We have so much demand right now. It is like a soda bottle being shaken up. So if you're an investor and you're looking to pick up, some single family homes or some duplexes, and you're thinking about, should I wait? Should I wait till interest rates come down a little bit more before I make that purchase? My personal answer, what Natalie and I just did, is absolutely not. Well, we just bought 4 properties. We're about to add another 2 right now. Why? Because when we get into this hot, crazy real estate market in a few months, prices are going to go up. There are going to be bidding wars. Prices and the cost of things are going to go up. Building materials, and there's going to be a land rush for properties. So prices will go up. Bidding wars will happen. So in my opinion, now is a perfect time, even with slightly higher interest rates, because you can always refinance later, but then you get the asset. You own the asset. You can refinance it later on if you want to. So that's what's happening right now. I'm really excited to see this. Again, we're seeing really good data on the housing side and also housing stocks. Okay, I don't buy, I don't own a lot of stocks, right? But I do keep an eye on the housing related stocks. And when I say housing adjacent stocks, those are stocks that are adjacent to the housing market, like Restoration Hardware, as an example of a stock, right? That company is really well run, and people buy furniture to put in their new home, and that stock is doing really, really well. Just Surge Pool is another company that installs pools. They jumped on this news this week. So did Restoration Hardware. There's a Site Brothers, a bunch of other housing-related companies that really jumped this week on the positive housing news. So fingers crossed, things are moving in the right direction. as we head into the holidays and into the new year. But first, I want to tell you about our friends at Lear Capital, because Natalie and I are big investors in precious metals. Yes, we invest in real estate, but a big portion of our portfolio are in precious metals, gold and silver, because of what's happening to the US dollar. It's no secret, if you're tuned in, then you need to know that experts are predicting a big recession headed our way. One economist just said, this is the beginning of the end for the US dollar. So if your savings accounts are tied to the US dollar, look out, folks. Please, please protect yourselves. And we are devaluing the US dollar faster than ever before. And last year was terrible for most investors, but 2023, 2024 could even be worse unless you're smart and you have a portion of your assets in precious metals, other hard assets like gold, silver, and real estate. And that way you can protect your financial future as these other investments start to collapse all around other people. So if you want to invest in gold, our friends at Lear Capital can get you set up and start purchasing precious metals right now, or even converting part of your IRA or your 401k into a gold and silver IRA. It's very, very simple to do. And you can call them. They love talking to people on the phone, so you can see if it's a fit for you. Give them a call today at 1-800-450-1008. There's the number on your screen. We've also set up a special website just for you as well. You can get your free gold and silver investor guide by going to learmorris.com. That's LEARMORRIS.com. And right now, if you call and work with them, they'll get you set up with $15,000 in free bonus metals. That's right, $15,000 in free bonus metals with a qualified purchase. Again, call their 800 number today, 1-800-450-1008. And you can buy gold bars, gold coins sent right to your home, silver coins, silver bars sent right to your home, or held in storage off-site. They will talk you through that entire process. Again, give them a call today, 1-800-450-1008. All right, let's get into your questions now. And let's take them. I think the first one is from John. Let's listen.
Hi, Clayton. It's John in Washington State. My wife and I are interested in investing in properties. We are in our early 40s. We've just started investing, saving for our retirement. We've put over 10K into Connect Invest, which we love, and thank you for the recommendation. We do have a lot of student loan debt. So we were hoping you'd have advice on how to speed us on our path to our first property. Thank you so much for any help you can give.
Thank you, John. Well, I mean, I hate to say it, but you are already on that path. You're doing a great job. So you have $10,000 that you put into Connect Invest, which if anyone's interested in that, you can go to our website, morrisinvest.com/connect. And a lot of you that are sitting on some cash, not a lot, but some, like John, who had 10,000 or so, wanted that to grow and make great returns. But it's investing in real estate. Okay, it's investing in real estate, a real estate fund. Okay, that's how it works. And so Connect Invest, for as little as $500, you can actually invest. So you're not owning the asset outright like you would in terms of buying a single family home, but at least while you're waiting, you're able to get great returns, like 9 to 10 or 11% returns. And you can keep it in there for however length of time you want. For a year or 18 months or longer. So you can, and then you can reinvest it if you want. So it's a great vehicle for people that want to get started investing in real estate, make some great returns while they're building up enough for a down payment. So good for you, John. As far as student loan debt, this is one of those things, right? There's good debt and bad debt. And so if you're sitting on student loan debt that has a very low interest rate, okay, if it's like, I remember my student loans were like 1% interest rate. And so when I was in wildly over my head debt years ago, when I was just starting out and I was in my 20s, I had a lot of debt. And I had like 5 or 6 credit cards. Those had like 18, 19, 20% interest rates. And I had a couple $1,000s on each of them. It was ridiculous. And then I had my student loans. And I made a spreadsheet and I looked at my overall debt. And I thought, okay, I'm going to go after the highest interest rates right now. I'm going to tackle those first. And the bottom of the list was my student loans, because I owed like $17,000 in student loans, but the interest rate was so low that I went after the highest interest rate ones first. Look, we wrote a whole book on this subject on how to pay off your mortgage in 5 years, but we really talk about how to pay off debt. It's really a debt book. So it's not just about paying off your own mortgage in 5 years. I would encourage you to read that book. It's about 100 pages. If you pick it up on Amazon, Natalie and I wrote it. It's the blue cover, which is the most recent edition of it, How to Pay Off Your Mortgage in 5 Years. I love, there was some other guy that wrote a book that literally copied our title. Don't buy that one, okay? Buy our book. It's crazy. Like, who can do that? It's like I write a book called Schindler's List, and then someone just comes in and writes a book called Schindler's List. It's like, really? You can't come up with your own title? Anyway, sidebar. So pick up, because what we talk about is paying attention to the time versus the amortization schedule and the timeline here. And so how to tackle these different debts that you have. And that book may help you. I would just say, don't let your student loan hold you back from investing. That's my key advice here. You can do it in tandem, paying down your student loans, but also investing. Because if you're going to wait to pay off your student loans before you start investing, what are you going to wait, 10 years, 7 years, 8 years until your student loans are paid off? And then 8 years of wasted time. You're in your 40s now. So remember, it's time in the market, not timing the market. So how quickly can you get into this? How quickly can you start investing? Forget about the student loans, pay them off. But I would rather be personally investing in assets that are going to be, wouldn't it be great to have an asset that actually pays your student loans for you? Like, imagine having a rental property that brings in $1,100 a month and your student loan bill every month is $800. Wouldn't that be great? Now you have a performing asset that is literally paying down your student loan debts. So that would be my thought. That's what I did, but your mileage may vary. Good luck to you, John. That's great that you're already on the path. All right, our next question. Let's listen to this.
Hello, Clayton. My name is Martin. I'm a long-time listener. For the last 3 years, I purchased 5 multifamily properties. All purchases went with conventional financing route. However, upon closing the loan, I transfer each property to a separate LLC from my name. Ultimately, all my LLCs are reporting to a parent LLC in Delaware. This is for the liability protection, I would say. So here's my question. Have you ever been to a situation where you had to get a HELOC or home equity loan from a property under a LLC, and what's the process? I've heard so many stories. Some people say that you had to transfer the property from LLC back to your name in order to get a HELOC. Mm-hmm. So if you can give me any recommendation or suggestions, that'd be greatly appreciated. Yeah. As you always say, I don't want to eat equity. I want to leverage equity and keep growing my portfolio. By the way, Clayton, you're doing an absolutely amazing job out there. You educate people, share your knowledge. We learn a lot of stuff from you that we don't learn from the school system. So please keep up the good work. Thank you, and have a good day.
Thank you so much, Martin. Very kind of you to say that. I appreciate it. So you're asking some really great questions here. Let me just recap. All of you listening right now can really learn from what Martin has done here. He has multiple properties that he has in different LLCs, and each of those LLCs reports up to a parent company that he owns in Delaware. We have our parent company in Wyoming, so your mileage may vary. So each of the LLCs reports up to the holding company, and then from there it even goes off for us into a higher level of liability protection. But that's not for the scope of today's show. So just know that a lot of those individual LLCs are simply pass-through LLCs. They're passing it through to that parent company LLC, okay? That is like the main one for him. Now, he's got equity in some of these homes. What does he do? He wants to leverage the equity, but is a bank going to say, wait a second, this home is owned by a business. We're not going to give you home equity funds. It needs to be in your own name. It needs to be in Martin's own name. And yes, there are certain banks that will make you transfer it out of an LLC back to your own name. Do a quit claim deed, talk with your lawyer. It's like $200 and it's transferred back to your own name. And then you can get the loan and then you can transfer it back, right? I know it's a few $100 here, it's a few $100 there. So yes, you can do that. There are other lenders though that don't require you at all to do that. They don't require you to move it from an LLC into your own name in order to get a loan and then back again. Okay. My friend Dan Kraus over at Churchill Mortgage, Again, I'm not affiliated with Dan at all. He's a great guy, but you can actually get business lines of credit for your LLCs on your properties. I will have a link in the description below to reach out to Dan. He can point you in the right direction on that. But you should not have to I'm saying this now based on what I know about current banks and what they're currently doing. But like Dan, I know, has specifically said you can do this where you don't have to transfer it into your own name. The other suggestion, Martin, is a portfolio loan. Okay, there are a lot of private lenders out there. Like I'm thinking of Kyle Jacey and his team in New Jersey, and also Direct Lending Partners, DLP. That's another private lending company that I've worked with over the years. Well, they'll look at all of your assets. They'll look at your 5 or 10 properties, and they'll give you a loan based on the equity of those properties. So you don't have to break them out into separate individual names. You don't have to move it back over to your personal name. You can get it very easily by just getting a portfolio loan. So Martin, there are a couple of ways to do this. You just have to be a little tenacious on the phone with these individuals and reach out. But I would start with Dan, my friend Dan Kraus at Churchill Mortgage. He's licensed in like a number of states around the country. He can likely help you or point you in the right direction for this, okay? And then I would also think about doing perhaps a portfolio loan if that doesn't work for you, if Dan's solution doesn't work for you. But yes, you can absolutely transfer it back to your own name and get a home equity line of credit that way. But I don't think you have to do it. I'm just going to tell you right now, you don't have to do it. We didn't do it. We were able to get the equity out of those properties without having to transfer it into our own name. So but we've had a lot of clients that do it. So they do transfer it and it's not a big deal. My point is there's multiple ways to do this, Martin. So thank you for that phone call. All right, our next question.
Hey, Clayton. My name is Eric Clanton, and I had a question about the first position HELOCs and how to take advantage of the equity that my wife and I built up in our home to invest into properties that are not liabilities, that are assets. So the other question is, if you are familiar with the first position HELOC, do you have some institutions that are familiar with that, and can they help us? Because I have looked around to my mortgage provider and they don't provide that service, and my credit union only provides a second position HELOC. So if you know where I can get that kind of information, that would be very helpful.
Sure.
Thank you.
Sure. Thanks, Eric. So again, I would reach out to my friend Dan Kraus at Churchill Mortgage. The thing is, the reason I say Dan, because he's connected, okay? And he can really point you in the right direction. Again, I am not affiliated with him in any way. If he provides you with a mortgage or is able to, I don't get any kind of cut of that or anything like that, okay? He's just a friend. He does great work. And he's a really honest person, and his collection of people in his Rolodex and the people that he's connected with are very honest, great people as well. I can tell you I'm currently working on a project with someone close to Dan, and they've been fantastic. So just to give you an example, and he will be able to point you in the right direction and maybe able to provide you with a first position HELOC on your property. I know that it's like, okay, we don't want to do a first position, we want to do second position. But there are plenty. Why wouldn't a bank want to have first position? Makes no sense to me. But he will be able to point you in the right direction. Again, I don't know how many people you called. I guess this, because we've had 2 of these questions back to back. So Eric, I'll say this: every bank is going to be different, and we literally had 2 different phone calls with 2 different banks on the same kind of product for a mortgage thing that we're working on, and one couldn't work with us and the other could. So you just have to shop around. You just have to get on the phone. You have to make a lot of phone calls. But I would connect with my friend Dan Kraus at Churchill Mortgage. We'll have a link in the description of this episode, so you can go there and you can connect with him directly and pick his brain on the first position HELOC. And he can tell you all the latest products, because they're constantly adding new products and they're constantly tweaking existing products. So I would definitely talk with him, because he's going to know way more than I will about what the latest what the latest projects are that they can offer to you. The latest products, they can offer you. If you have any questions, please go to our website. Go to morrisinvest.com. Click on the microphone icon that's on the right side of your screen. Leave us a voicemail question. We will attempt to answer it here on the show to the best of our ability. And in the meantime, folks, right now is the time to buy properties. I'm going to tell you, it is a golden time right now, even with slightly higher interest rates. Again, right now we're getting to a hot market here. So if you're sitting there waiting on jumping on properties, do not wait any longer. Book a call with our team if you're interested in new construction, full service rental real estate. That's what our team does. We'll take you by the hand and hold your hand through the whole process. We have built-in lenders on our properties in the best rental markets in the United States and fully property managed by a property management company. You just basically sit back and you collect your rent checks every month. You have to file your taxes, of course. That's on you. And you have to take care of your portfolio once a month, jump on the phone with your property manager. But our team does the rest. Our team is fantastic. So book a call with our team if you like. Go to morrisinvest.com. We can help you. But if you don't work with us, it doesn't matter. Go out there, guys. Take action. Become a real estate investor. I don't care if you work with us or not. But be smart about it. Start investing now. Remember, it's time in the market. And if you wait, you're wasting time on getting into this fantastic market right now. All right, thanks everyone. We will see you back here next time with another Q&A episode. Have a great day.